Rise there maintained its hold on rates, but the central bank south of the border is warning of slower growth and higher inflation. And of course, that carries implications for commodities and the oil market. Let's get more from Jason Schenker, president of Prestige Economics. Jason, great to see you. It's been too long. What was your takeaway from Jay Powell's remarks?
Yeah, thanks, Andy. It's great to be here with you today. I think there's a couple things. One is the Fed is data dependent, and this is a situation where things are evolving. Uncertainty is high. We know that tariffs can be inflationary, but it's also true that risk and fear of tariffs can be recessionary and deflationary. And the Fed doesn't really know exactly where we're going to end up, except for the projections did reflect an unchanged set of expectations for interest rates from the December projections, which showed expectations of 2 rate cuts this year. Additionally, it showed expectations that growth in the fourth quarter year-on-year is likely to be slower than was previously projected, while inflation and unemployment are expected to be higher than previously projected. So it's not a great outlook because you still have an expectation of higher inflation, higher unemployment, slower growth, and the Fed's still cutting rates, but not being able to cut too much because of that elevated inflation situation.
What about the implications for the oil market, for example? Let's have a look at a 5-year chart for oil. Of course, America now, it's such a bizarre situation, a net exporter. I know this has been the case for quite a few years of oil and petroleum products.
Yeah, the petroleum product piece is especially important, right? Because there's a value add if you're exporting product as opposed to just exporting crude. That's been a big value add. The U.S. has really, especially the Gulf Coast, has begun to occupy a position of a global fulcrum in global energy markets, thinking also about the importance of U.S. LNG exports. Those things have been really positive for the U.S. economy. But for oil prices, right now, the biggest concern is as we run up to the driving season, and of course the U.S. summer driving season, biggest seasonal driver of global oil demand in the world, consumer confidence has fallen. There's uncertainty. Business confidence has fallen. The risks and fears related to tariffs are significant, and we see the Q1 2025 Atlanta Fed GDP now currently reflects expectations of a minus 1.8% GDP print in Q1 based on data available through March 18th. So you've seen confidence fall. There's a potential Q1 GDP could contract. That's weighing on crude oil prices.
The whole global, I mean, I know we're moving away from the Fed here, but the whole global commodity market, in particular metal, seems to have been distorted by this trade war.
Yeah, there's a few things, right? On the one hand, if we think about tariffs are inflationary, but fear of tariffs are deflationary, right? The fear of tariffs is what's really having a big impact. That has been weighing on the greenback. That has been weighing on bond yields. That has been also supporting gold prices. As for things like copper prices, that is one of the things the president's focused on. He's focused on advancing U.S. economic security and national security objectives, which include things like economic self-sufficiency and tonnage. If the U.S. is preparing for Chinese containment and a potential conflict in the future, securing supplies of copper and other metals are going to be increasingly important for materiel to build the weapons of war.
Isn't it amazing? I mean, it seems like for decades, we kind of ignored the importance of these materials. But it's almost like we've gone back to the First World War. Well, you've got to have your metals. I mean, the Germans couldn't get rubber, for example. People have realized the vital importance of these substances.
Absolutely. This was, interestingly enough, part of some of the first Trump administration's regulations. We look at the Section 232 tariffs on steel and aluminum came out of that. There were other focuses on different critical minerals, materials, rare earth minerals. There was an analysis around that. We saw that continue during the Biden administration, a bipartisan issue, and now accelerating in the second Trump administration. So make no mistake, this is a bipartisan issue. And of course, in Canada, Canada, I think y'all have been a bit more focused on raw materials because you have a lot of raw materials, especially relative to the population size. Mm-hmm. In the U.S., we're net importers of a lot of different things, including copper. And there are risks that we could see things like export bans of these products, right? If we're not producing enough here, would we be allowed to export it? So those rules could change, tariff rules could change. Everything's up in the air, and everything is about U.S. national security, economic security, and Chinese containment.
It's unbelievable, just the way things have turned so quickly. We knew Trump would shake things up, but I don't think anybody expected it would be so abrupt. Jason, thank you very much indeed.
Thank you, Andy. Pleasure to be here.
Jason Schenker, president of Prestige Economics.